You know, reverse mortgages have been around for quite some time, but along with this new economy has come new challenges for reverse mortgages and new things to consider if you're thinking about getting one. Here with everything you need to know right now is Fox 29 Common Sense lawyer Shari Olefson. Thank you so much for being here.
Sure. Good morning, John.
First off, what is a reverse mortgage? How does it work? How does it benefit you?
Of course, a reverse mortgage is a product that was designed years ago for elderly folks who own their home free and clear but don't have a whole lot of other money or assets, and the point is to allow them to use the equity in their home to pay their expenses till end of life. So you have to be 62 years or older, and you have to own your home free and clear. Part of the advantages, though, of reverse mortgages in this economy is we know a lot of folks that fall into that bucket are either unemployed or underemployed. Many have credit dings, and we've also learned the dangers of living in a recourse state versus a non-recourse state. A recourse state is, of course, where your bank can go after you for the extra money if they sell your home and it doesn't pay off. So reverse mortgages are not as sensitive to your credit score or your income, and they're always non-recourse.
All right. Now, it sounds like a pretty good idea in principle once you reach 62 or if you're older. What should people, though, be on the lookout for?
Well, here's the thing. Reverse mortgages are very circumstance contingent. So there are details that apply to a reverse mortgage that don't apply to a regular mortgage. For example, if you're not on the deed and your spouse passes away, you may have to sell your home or move.
Wow.
If you pass away, your children will have to sell your home or pay off the loan, because the loan has to be paid when you die, move, or sell the home. And so if you move into an assisted living facility, you have to pay off the loan. So it's more complicated. You need to think ahead. They're also more costly, and the reason for that is that a lot of investors are involved in reverse mortgages now because the big lenders got out of this business. So we've got smaller mortgage brokers and investors. They like these lump sum reverse mortgages where the interest rate is going to be higher. And you also have a lot of scam artists out there looking for folks who have cashed out their equity. So you really need to be careful and not spend that money if you are going to take it out.
So, yeah, there is a lot to think about. It's not a one-size-fits-all proposition.
No, and those ads we see on TV with Henry Winkler or Robert Wagner talk about being government guaranteed. Well, the government is guaranteeing the bank that they'll get repaid. They're not guaranteeing you.
So how can people protect themselves in this economy?
Well, the best tips are really to delay putting off a first mortgage as long as you can, so that you have that equity and you don't basically outlive your money. Of course, shop around and really compare other alternatives. For most people, if you can afford a mortgage payment or have cash someplace else, there are less expensive alternatives. And last but not least, work with a professional reverse mortgage expert. Nowadays, you have to get counseling in order to qualify for your reverse mortgage. There are new rules coming out to help protect people further, but in the meantime, you really need to protect yourself.
Get some advice from a pro, especially in today's economy.
Absolutely.
You don't want to, mortgage the house if you don't have to.
No, this is your life savings.
Absolutely. All right, thank you so much for being here. We'll see you again next week.
You too.